Garrett, Powell's saying that the Fed hasn't done enough to halt inflation yet. We established
Yes.
that, but they're still getting ready to ramp down the size of rate hikes this month. So what's going on here, man?
Well, what's really important out of that statement is we will require holding policy at a restrictive level for some time. And if you look out into mid-2023, you're seeing people making bets that the Fed is going to be cutting rates, not holding them there for a year, not going to 4.5%, 5%, and then leaving them there for a year. The lessons of monetary policy going back to the 1970s is that if you engage in cuts, what you end up doing is bringing back aggregate demand, which does what? Brings back inflation. And that's a really important lesson. That's what they're trying to avoid. So restrictive for some time means raise, find a level that they're comfortable with, and then hold it there. And that presents the situation, Vaz, in a couple of months where we get up to a 4.5%, 5%, maybe even higher range. And then what the market is looking for is not another hike. The market is now pricing in cuts, and the cuts don't come. And that's where you see kind of the Fed pull the rug out on the other side of this market. It's going to impact valuations. It's going to impact sales expectations. And again, I'm frustrated on some of this because there are so many companies out there that don't deserve to be in business right now. They are extraordinarily unprofitable. They're not even profitable in some cases. And also, they're still trading at these outrageous valuations. They're getting squeezed right now. So if you're short, it's tough. It's really, really tough. But your logic is correct, because over the long term, you get out to next year, you're going to present yourself with, these short opportunities. And that's why, we focus on momentum, because we've been in a positive momentum environment for about 3.5 weeks. And that has kind of created the situation where you don't try to go net short too heavily, but you got to take shots where they present themselves. So, you get these mix of wins and losses, and, you try to move on, you try to learn from it. But I mean, this market will absolutely whipsaw you. And the one key thing that I said yesterday to people was, before this meeting, if you're net short this meeting, ask yourself, what could Powell do to rally this market? What could he say? Think about that, because if you have downside bias against a major event like that, you can lose big. It's why you want to react to this news and not try to predict how the market is going to do it at 1:30 before he speaks.
Right. Really well said, Garrett. What could he say that can help something like that? These kind of stocks, kind of companies rally against your logic. Let's bring in Shah here. Shah, with what a great convo. Hot take, Garrett. So, Shah, on the heels of what Garrett just said, are you lining up more zombie stocks with your hyperdrive traders to, capitalize on the next round of rate hikes?
No, we're kind of pulling back a little bit on the zombie stock positioning, because we're getting beaten up on those. When all boats rise with the tide, and that's what's been happening off of the lows, and then yesterday again with the softish landing rhetoric and the defining the next rate hike at 50 basis points, essentially, we're seeing massive short covering. And the short covering happens often in the worst segments of the market. There's a Goldman Sachs trading desk report came out yesterday that of the short covering, they called it unleashing short covering hell. Non-profitable tech stocks rose on average 7.83%. 12-month losers, the worst performing stocks over the last 12 months, rose 6.21%. Bitcoin sensitive equities, Bitcoin sensitive, up 6.6. Most shorted, up 4.6. So all boats are rising with the tide, including the crappy zombie stock. So yeah, we're moving into some longer side positions on the trading side of what we do in hyperdrive. But we'll have to wait for this to run its course before we start to get back into some of the zombie stocks, because a lot of them are overly shorted, as they should be. But when you have rallies like this, they get caught up in the rallies.